Hello, everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and with me today is Scott Redler. Thanks so much for coming back today, Scott.
Good to be here. Love it. Little post Fed. Always a great day to be on with you.
Yeah, I think the last time you were on was the last Fed meeting, so we're just keeping with that consistency here. Okay, so for everyone who's been here with us before, you know this question, and Scott knows as well. I want to start off with you grading your week of trading so far. So give me that grade on your typical school scale, an A to an F, and why?
To be honest, I lost money this week, and
Okay.
I I really wouldn't do things that much different.
Hmm.
For those who trade, they know that on Monday there was some, actually Sunday there was some news about the rebounds. So what happens
Hmm.
coming into an OpX, the Nasdaq has to do a rebound. So indices that have too many, um, what's it called, too much of a concentration of the Mag 7, that was the news.
Hmm.
They have to get to a certain percentage if they have too much, and those stocks that have major buyback programs take away some of their float, so they have to mechanically sell. So all of a sudden on Sunday, I wanted to be long this week. We closed at highs last week. I was long really good stocks. I was long, Apple, Amazon, Google, Nvidia, like six squares, like seven names trying to be long. And PS, every one of those at 925, a selling balance came out. Apple was down three, Google was down two, Amazon was down, and I wound up having to manage them. And I think I managed them okay. It just
Hmm.
was, just was, I don't know. It's like hitting on an 11 versus six in blackjack, getting a two. The dealer opens up a five and gets a 10 and takes all your money. It's the right hand, but you don't know exactly what cards are coming out. So
Hmm.
anyway, so Monday I lost a lot of money. Um, but today, I think I handled today pretty well, because I kind of knew what the Fed was looking, or what the street was looking for. And then when I heard the statements, I was able to adjust. And I was down a decent amount of money this morning, and I
Hmm.
made, a lot of it back and then some, especially in my options. So for the week, I'd give the market, just the way the market was. Yeah, it's markets and markets. I'd say a B minus.
Okay, great. How is
Pretty
it? Yeah, I mean, solid
always.
passing grade at that point. Um, how is it for you? You have a week where you've lost maybe a lot of money, but technically you've traded really well. You've followed your plan. You've followed your rules. How is that mentally for you as a trader to kind of compare and contrast? Like, yes, I lost money, but I did everything right, so I want to go back and change anything.
Well, you have to, if you have a bad day or a bad few days, you have to say, was it my fault? And you have to look at it. And when you say, hey, it's my fault,
Hmm.
then you usually don't make the same mistakes. If it happens to be situational and something you couldn't foresee with the market, then you have to say, okay, that was unfortunate. I would do that again, and hopefully next time not get a leg sweep. So
Hmm.
mentally, you have to like have small wins. So I feel better now than I felt this morning. And sometimes it's just like, why me? I need a bird to
Yeah.
poop on my head, change my luck, or something like that. But I don't know if you ever heard that wives tale, right?
Yeah. Yeah. Yeah.
Um, so it's just like small wins. You just got to make the right decision in the right situation. And then if something changes in the morning, then you have to make the right decision based on the new trade of the new day. And
Hmm.
so if you do that, you have to, be okay with it. If you get caught like a deer in headlights, or you're unprepared and you can't make the right decision and you lose more and get stubborn, then that eats away at like the trader's soul. And then you
Hmm.
have to really say, why did I do that? And how do I not do that the next time?
Yeah. Okay. Great. Okay. So let's get right to the news of the day today. You know, just a reminder for everyone who is here with us live, if you want to ask Scott any questions throughout this event, submit them in the chat there on LinkedIn. I've put a comment just so everyone can see where that's at. And I'll get to all of those questions by the end of this event for Scott. So we want to make sure we're answering your questions as well as having a conversation about what I've prepared. Okay, so the news of the day, obviously, Scott, the Fed held rates steady as expected. They also signaled three rate cuts in 2024, the new dot plot showing three cuts. Were you surprised at all by today's decision and outlook? Why or why not?
Yeah, yeah, I was a little surprised. I kind of thought that, the street was basically penciling in four rate cuts,
Mm-hmm.
and the Fed never said anything about any of that. And the way his tone has been at every meeting. It was more like, okay, we're not in any rush to cut rates. So really, the Fed pivot was supposed to be no more raising cycles over, but we're not in a rush to cut. There's got to be some things breaking in the economy to cut. So
Mm-hmm.
in my head, we had a big rally into today. So when all of a sudden I heard him say 3 rate cuts on the dot plot, I
Mm-hmm.
quickly adjusted. That to me meant buy some small caps. That mean, I bought XLE actually today. And I just, adjusted pretty fast, and it wound up making me a decent amount of money all across the board. So I give myself an A, knowing what the street was expecting, what he came
Mm-hmm.
out with, and reacting fast in that 30 to 45-minute time frame when you had the capability to do so.
Hmm. As you mentioned, the street has been pricing in those 4 rate cuts for the year. After the release of the updated dot plot, the market pricing for a March cut jumped up by about 20%. So we were sitting around like 40% this morning, and then around 60% after the new dot plot. The Fed, I think they don't show cuts until summer, technically, with those 3. But you've previously said that you are not in the March cut camp. Did that change for you today?
No, I still kind
Okay.
of think they're not, because especially if, like, here, let me just show you the chart. You see the chart of the S&P cash. I'll put that up.
Yeah, you
We
can just
can
hit
go through
share screen and we'll be able to see
I'm getting good at this. Like,
it. There we go. All right, we see it.
is it up?
Yep.
So right now, look at the chart of the S&P cash. We just made a
Yeah.
new, weekly high and monthly high. So when you had 1, 2, 3, 4, you were up here. Like on the 5th day, there was a lot of people caught short there. A lot of people were like, okay, he's going to say they're not cutting rates. The street's going
Uh-huh.
to be caught off sides, and that's going to start this pull in, and that didn't happen. So at this point, we're a lot extended from the 8th day. The hourly went out of plus 40. I've seen him plus 70, so you can't just be short because of that. Then you go to your weekly chart of the S&P. So if you look at the weekly chart, I drew this little bull flag above the 8th day. You had your move,
Mhm.
sideways action, took out 4609, 4607. You know, I don't know. I don't know why we wouldn't see 4818. It's like there's nothing going on here. There's a whole little void here
Mhm.
going into the end of the year, especially, by the way, this is, I'll get into this afterwards. That's my Redler personal. So if you're not trading actively for a living, which we'll get into Redler active, Redler personal later. I want that question. But bottom line is,
Okay.
if we take off, the one thing I'd say the Bears are probably rooting for, which is pretty much all
Mhm.
they have here, is that we hit 48.18 and we get rejected there and it turns into a double top and then we pull back. And then I would say if that does happen, which may be, I can give it 20% chance that I'll give it probably 80% chance we at least see this at some point within the next 2 to 4 weeks. And then I would give it 20% chance that we hit it and it creates a double top and then we come in. And then if that does create a double top and we start to sell off in January and we pull off a certain percentage off that high because the data is getting weaker, then maybe we have a March, rate cut. But if all of a sudden we're in cruise control, we get above 48.18, maybe even do the monthly chart, which I haven't done in a while, which actually shows when we broke above the descending channel here. Let me make this a little wider here. Let's just do a little exercise. That's how I mark up the charts. Now we're above this. So the Bears couldn't get their double top at 46.07, which they would have liked.
Mhm.
So you put that there, took it out, so they had to get squeezed. So now you have 4,800. If we're above 4,800 in the first quarter, and it does, and shorts are trapped, and we're continuing, I do not see a March rate cut.
Okay.
If anything, it might be sound a little bit more hawkish because he doesn't want the market to get overheated.
Mhm.
And this is, by the way, this is your look at this chart. Look at this, by the way. Look at the 8-day moving average when it broke right here, and then look
Yeah.
when it took it back right in here. Technicals
Mhm.
help versus opinions. And then look at the size of this igniting candle. This candle took out this entire range. So usually that means that candle's in control and it had a move. So anyway, I'm just throwing out little tidbits for everybody, Greta. So
Yeah, that's
do
great.
I'm not in the March camp, but who am I? I'm a technical analyst, strategist, trader, dad, Iron Man, who is not an economist.
Yeah. All right. Pull that chart down for now, and we'll keep talking, and you can bring them back up in a little bit. Um, So you were surprised by the dovishness of both the statement and Chairman Powell's press conference. Was there anything in particular that he said that kind of piqued your ears or had you like, oh, that's definitely different than what I was expecting from
Yeah, the dot plot changed to
him?
3. Some people are like, oh well, the street's looking at 4. I'm like, well, I was thinking he was going to say 0. So 3
Yeah.
was what perked my interest, and 3 was what made me buy a little bit more XLE and a little bit more IWM, because then the playbook of rates going lower, those do better, and I've been pretty in tune with the IWM, making some really good money there.
Mm-hmm.
To give you we'll get to the chart of the IWM on a different question on, but that right there was what changed for me in my mind, that the street was actually right, that
Yeah.
the Fed is looking to not only stop raising, but they're thinking at least 3 next year, and we'll see when that happens based on the data, the action of the market and the world.
Mm-hmm. All right, so let's talk about the strategy that you used today. You said you came into the day down quite a bit, and then you ended up doing really well. So just talk about how you approached the meeting ahead of time, and then, of course, how you navigated the market response after the decision.
All right, so let's go. Can we go back to screen share?
Yeah.
Okay, here we go. Share. So I have a note that I write. So let's actually go to here for a second
Mm-hmm.
before we get to that. So in my note into my charts, okay, I have Redler All Access right here. I post a lot of charts. Okay, usually they go out before 8:15 to give levels to watch to figure out how to approach different sectors. So one of my thoughts today, as all these, by the way, Redler Premium, these are all charts that get posted. And on Redler, Twitter, to the Twitter world, Twitter. I only put a few, but in Redler All Access, they get about 30. So in here, look at the IWM. The IWM, where is the IWM? Here are the sectors. Hey, there's me going over the rules. You should read that. The
I did.
IWM, it's right here. So you had a nice little bull flag, right? So this was the inverted head and shoulders pattern, nice little bull flag. I'm like, IWM gave many ways to participate in this active long sequence. Can bull flag hold together for another trade? Active support is 185, which it held the 8-day. It would need to clear and hold 188 for more upside. So that was posted today. At what time does it say that? It's 7:25 in the morning. So that is my thought process on the small caps. And in my head, if he's super dovish, the first thing they're going to go after is the IWM. So again, this is how, as a trader, you need to formulate, your own dot plot. So then you go back here, and then let's go back to the charts. Okay, oh, look at that, I'm getting good at this. And you go to the IWM, and woohoo! There you go. Remember that bull flag pattern that ignited, to say the least, with the same language that I had on here from the morning? Well, that was what made me really good money. And then also you have some stocks within the small caps that reacted, that I went with also. But this was the major thought process right there. Got above it and went as high as 193.64. And it also gave you a few little Bible dips, once he started speaking. And so that's how you prepare to execute prior, and then hopefully thinking clearly enough, execute in the moment and make money.
Great. I mean, definitely a huge market rally overall, after the decision. In particular, the Dow Jones hitting or crossing rather 37,000 for the first time ever this afternoon. Have you been surprised at all by this massive move that we've seen in the market at the end of this year, or makes sense to you?
I go by active sequence. I write a report every year. Like right now, I'm writing the 2024 report. For 2023, I thought it would be another range bound year to absorb the excess of lower rates and normalize. So I think I put out there, I would think 4,500 by year end, which is better than most people. And
Yeah.
obviously we're 700. But if you look here at the SPY sequence, so I don't, I personally, look at sequences, and when we get above the 8-day, which happened on November 1st, I try and stay with the rally and have a portfolio approach while it's above it, and let the market make me money, because I can massage positions using a tier system. So if you go into this move as an active trader, the first time I got a lot lighter was on this candle right here. This candle, to me, said, hey, maybe we're going to fail into resistance. That's where we should have failed if the bears were going to stop this rally. And then all of a sudden, I remember on the Friday, it took it out and cleared it, and you had to readjust, get out of your shorts, get back involved, right? And then you had to move up. This candle also got me a lot lighter, saying, hey, it's a bearish candle. We've come a long way. Everybody's so surprised out there, but I'm a trader. I can't listen to them. And then, this day was an inside day and then got back long again. And then here we go. So I like listening to the market sequence versus listening to any of the guys that play traders on TV or think they know, what they know. Because nobody knows, right? Otherwise, everyone would be billionaires in the stock market. You have to, look what's in front of you and trade the market that's in front of you, not the one that you want. So for the spies, yes, was it a hell of a move? Yeah, but also that's why I talk about multiple time frames. As an active trader, I get paid quarterly. Most active traders get paid monthly. So just in case you didn't make as much as you thought you were going to make during this, if you have a long-term approach with a 401k or a 403b or a 529 or a blood on the street account, you're not micromanaging it, and chances are every bunch of years the bull market does win and you make money long-term, for retirement and for college. So you don't really have to worry about how it happens. But if you're trading for a living, you have to, because again, a day like this could have said rally over, okay, but it didn't. Okay, and I remember that day. I was like, oh, that's it. It's been a nice move from the low into resistance, and then all of a sudden, if you started rolling up shorts from this day and you got stubborn, give you grade an F because you didn't cover here or here, and then you got your clock cleaned. So you have to be able to adjust. So you can have an idea. If the market doesn't confirm your idea, it's wrong. Move on.
All right. Let's look back on this week a little bit. It's into Wednesday, so we have 2 more sessions to go. But tell me about the best trade you've had this week and what made it go well. You can show on the chart if you want where you got in and your philosophy if you'd like.
My best trade turned into my worst trade today, believe it or not.
Okay.
You want to see that? Crazy. So ARM, if everyone remembers, ARM came public in the past year. It's supposed to be AI chips, high valuation. The investment banker piggies brought it out too high, but it's been trading technically okay. So ARM, okay, it had a move up, was going sideways. So to me, this was a nice cup and handle pattern. So got a little choppy in here. I bought ARM on this day. This day was, I believe, what was this? I think this was Thursday. Okay, Thursday of last week, and then on, I think it could be a Friday, it took off. It cleared this whole area. I bought a lot, made a lot of money. Okay, that was my best trade actually Friday, so we'll cheat a little bit. And then this day I was long, and it kind of came in, but not so much. I'm like, okay, perspective, fine. And then into this day I was still long, and then this morning it came out with, with an upgrade, and I sold some, and then I bought it back, and I was going to stop myself out here, and then I was like, you know what, I'm going to give myself to this low because it looked as if it was just going to head back down to here, and I wound up losing money. And by the time I turned around, it went green, and it looks just fine now. So this really good 2-day trade that I thought would hold up here got a little bit choppy, and I got too big, and now I'm not in it, and I lost money. So I'm going to have to figure out how to revisit this thing if it's going to wind up taking out this area moving forward, because it does feel like ARM should see a move higher than this, and this in the coming year could be like a 72, 70. I agree with the 72, $73 price target, but today was one of those days where I wasn't sure. Also going into the Fed, were we going to sell off today? Was this going to be the end of this move? So in the morning when it went from green to red and was for sale, at least I used my I used my strategy, not my strategy, my stops, and I got out. But kind of hurt me today. So that was my best and worst trade in the same name. But I guess I would do the same thing again.
Yeah. Okay. Great. All right. Let's pull down your chart for a little bit and let's do some audience questions. Of course, if there's a relevant chart, you can pull one up. Zahn asked, what's your outlook for 2024, especially regarding recession concerns?
I'm not concerned about a recession.
Okay.
And I do think that.
You don't think there will be one, or you're just not concerned about something bad?
Sometimes recessions are good for the stock market. Sometimes they're not. It's only a recession if you lose your job. So if you're a
Yeah.
trader, you don't care if there's a recession. You got to stick to your process and your routine so you can make money trading. And if
Hmm.
it happens, it happens. There'll be opportunities then, because if you have money, you could buy houses for cheap. When people are over excess and they get stopped out, there's so many opportunities during a big time recession. But do I think it will happen? I think there'll be a slowdown, but I don't think we're going to be in the definition of a recession. The definition of a recession is 2 quarters of negative GDP. Last quarter, we were at 5%. I don't think it's going to happen. People are saying we're in a recession now, and we still have 5% GDP. So
Yeah.
the definitions, I don't care. It's just talking points on TV. We'll see how it goes. I want to measure the active sequences when the market's moving well. I want to be long when the market's in a corrective phase. I want to have cash and be careful. And then longer term, I want to cost average into recessions, because chances are, again, the bull market wins over time.
It's a really great point, to be, trading the market in front of you, regardless of the noise that's happening around the market. The numbers of the numbers. You can't argue with them, even if someone says we're in a recession or not. He also
Right.
asked if you think there's a bear scenario for the market going forward.
Bear scenario. Tell him when the spies break the 8-day moving average, I'll get a little bit more risk averse and a lot flatter. But for right now, what he should worry about is we're up 1, 2, 3, 4, 5 days strong. The oscillator's plus 40. You don't want to chase this market, but you also don't want to fight it.
Hmm. Yeah. Okay. Philip said, as you evaluate purchasing options, what factors do you prioritize or find most important when selecting a contract?
Well, it depends on the chart pattern. Depends on, are you buying it for a trade that might trigger? Are you buying it for a thought process that might happen in 2 to 3 weeks? You buying it when there's a binary event, so you know the date. You're either going to be right or wrong. So all those things come into play when you're doing options. Usually, I use options when I'm worried about a binary event going a different way, and then with an option, my risk is at least quantified by the premium paid.
Okay, totally makes sense. All right, Scott, how would you describe the current market sentiment and action? I mean, I could guess, but I want you to do it.
We're in an active sequence to the upside until proven different. There's been rotation, there's been participation, there's been ways to make money, there's been some surprises like what happened to me on Monday. They're not giving money away on trees, but there's a lot to do if you follow your trends, you use your tier system, and you don't get a little over your skis at times.
Hmm. For a market that is, I mean, inarguably overextended at this point, what would you kind of expect in the short term for maybe some type of corrective action, a pullback, maybe correction through time, not through price? What would you be looking at in the short term?
Well, short term, let's go back to the chart for a second.
Hmm.
Um, definitely, definitely had 1, 2, 3, 4, 5 up days, and I think a lot of people got caught short today, thinking that we're going to reverse. Would I be going out and going after stocks at their highs now? It would be a little bit tricky, but it doesn't mean you could just short things. There are things that are still kind of set up and haven't moved like this, like the spies. And if we do it sideways, this digestion, chances are there could be individual names that move. Like look at this move in the spies. In here was your Bible move. That's why I tried to be long on Friday into this week. But again, that situation happened. But I look at something like an Apple. Apple to me, looks like it just took out 196. It just got close to this 198. Seems like this is going to be 200 plus. So I have a lot of options for that for 12/29, which is in 2 weeks, which I do think happens. I'm not sure if it's going to happen before Friday because of the rebalance and Apple's a sell there. So for
Hmm.
Apple, it's different than other things. So Apple broke above this, showed relative strength, and seems like it's going to be 200, by Monday or Tuesday. So I have options on it for that. Amazon also, seems to me like it's breaking out above this, and I don't know why this wouldn't extend into the 150s, because strong stocks in December typically don't get sold, because if you sell a stock today, you're paying taxes on them in April. Nobody wants to pay taxes in April. So if you wait and you sell the stock on January 1st, then you're paying your taxes on that stock in 2025, which is a long way away in a different world. Who knows what happens between now and then? So
Mm-hmm.
strong stocks usually get stronger, and this is a nice upper channel, and it seems like it can go higher. And if you go to the weekly chart here, the weekly chart, has a nice bull flag above support, and it's not even at an all-time high. So, I think there's a lot of room in Amazon. And Apple's a different trade. Apple looks like it's about to take out the all-time high, which could lead to a lot. So there's room for something like Amazon. Amazon's not as strong, but we're saying this is leading. So these two stocks are my focus two stocks going into the end of the year. But I'm not buying the SPYs right here because the SPYs could rest. And so that's how I kind of, break it down. And some people are like, well, what about, Microsoft? Well, Microsoft didn't react well today. Microsoft tried to poke its head above here. It already made a new all-time high, so it's stronger in actuality than in Amazon. But the setup right now just feels a little bit different. So it's about to set up, and we'll see how it goes from here. Same way with Nvidia, right? Nvidia had a really awesome year. Like every time CNBC puts up Nvidia, it talks about the huge percentages it made in the first half of the year. But then if you look at Nvidia now, it's in a channel that's done a whole lot of nothing. If you bought Nvidia in July, you're down money. If you bought it in August, you're down money. So it's a nice channel. So at some point, if this wants to get going above 502, 505, chances are it could be a nice trade there. It's not extended. So that's a different trade. It's setting up versus a Vago that already did it. Look at that move. Holy cow. So that's a little extended. So each trade you have to identify based on your time frame and what you're looking out of it. And for right now, the market just had a nice 4 or 5 day move, so you have to be careful with new buys. But there are some things that will outperform, and because money went to IWM, maybe there's some better setups there to move.
All right. You already asked for your thoughts on the Tesla reversal.
Okay. My thoughts on the Tesla reversal. So let me just get to, am I still sharing my screen right now? No. Okay, so let's go back there. Share screen. Let's go back. Okay, we're sharing? Now we're sharing. Okay.
Yes, now we're. All right.
Let's go back to my trusted game plan, because that's what I trust, right? So you go to the charts from the morning, right? Go to, after I do the sectors, I always do the high beta tech names. So if I go to Tesla, Tesla's still not special. It tried to get above and stay above 245, which it couldn't. Watch 231 area, hard break of this, and it can see lower prices. Right there's 231. So when it broke 231 and went to 230 and a little bit below, I was like, Tesla broke 231. If you made money short, congratulations. Now make sure it stays below. Get below and stay below in order to show commitment to the downside. Okay, what it did is it went below it. You could have made money, but then it went back above it. So knowing that 231 was the rubber match spot, you made a lot of money on either side of it. So move this back. So 231 was the key. The key. Oh, hold on, let me show you something else. So let's go back to here for a second. This is Redler. Now this is Redler. This is Redler, public Redler. So right around here, let's see. Let me show you something real quick. I don't know why all these people are. Tesla stayed below 237 and broke 231. Now it needs to stay below 231 for those short. And that was 5 hours ago. So I update my thought process to try and let people know how to react if certain things happen. So now you go to Tesla. What did Tesla do? It broke below 231 and then reclaimed it. So you could have made money short. You could have lost money short. And you could have made money long. You could have lost money long. But if you knew that 231 was the key, that was your action area. So now this kind of changes. It washed out some longs. Maybe this is a bottom tail. Maybe, it means that it could now work its way up towards this spot. Right now, it just went right into resistance. So we'll see. It's still choppy. It's not leading. It's a kind of mess here. And at this point, it had a reversal. Some people might have been home, went home long it. I'm still not touching it because to me, it hasn't been trading well. And there are other things that are a little bit more clear. But that's a first step. Step one, Let's see if
Mm-hmm.
step two, step three happen, because the longs and the shorts are both getting, confused and frustrated, because I know if I was short now and I thought I was going to get paid and it was going to go to 226 or go lower, all of a sudden, the trade didn't have any follow through. It was just a range bound trade where you had to take it.
All right, great. Matthew asked, when markets return to normalcy, does trading become a less enjoyable occupation? He said, I'm very interested in trading, but worried what will happen when volatility is removed from the market.
Well, then the S&P will probably be above the 821 day. That means you're probably going to have to sit in positions a little longer, not
Mm-hmm.
trade them as much. And the VIX just hit a 2019 low, so that's what we have right now. Again, I'm not
Yeah.
going to put up the SPYs, but the SPYs have been in an uptrend since November 1st. It's December 13th for 6 weeks. Sometimes it goes for 3-4 months. The longer it goes, the better, because it broadens out and you get some confidence in buying dips and you stay with, like 2020 to 2021 was my
Right.
best year, because we were in an uptrend for 9 months and I had 35 positions and I made well into the millions of dollars trading, versus from 2021 down, you couldn't have money working. You had to test levels. You had to take your money. You had to, or be net short, which wasn't always comfortable for me. So in times of low volatility and things are trending, you can make money. You just have to be patient and sit and not overtrade. There's all different types of markets.
Mm-hmm. Yeah, I mean, and you've seen what you've been trading since 99, right?
99-ish.
Yeah.
Yes.
So you've seen
Told me
all types of
I'm as old as
markets.
your dad.
Oh, okay.
That's where all the
um,
friggin', the sophisticated lines come from.
Brian said, when do you think NVIDIA will play catch up on the upside? In December, or will it wait to January?
I don't know. I was actually looking at NVIDIA options today, so we can go back there. I didn't pull the trigger. Because NVIDIA's been it's been hard. It's been, back and forth, back and forth. I think you could wait till things happen and show commitment to it. Like today we got above 477 and held it, but it didn't feel great.
Mm-hmm.
This is 505, 502. You could wait for it to get above 500, 502, and then put on an active long. And as long as it stays above it, maybe you get, a measured move here, which is about 100 points. Or who knows how it happens. You could say, hey, you know what? Could happen by mid-January. So if you want, buy like a 510 by 540 call spread. So this way you don't have to worry about when it happens, and you're involved if it happens between now and January 15th. I was looking at it and I was just like, you know what? I was looking at, like, I think the 510s, they were like $10. So I'm like, oh, so if I buy the 510s and sell the 540s, it'll cost me $5 to make 35 if it gets to 540, which is a nice gain, a few 100%. But I didn't pull the trigger. So I don't know. It might need new flows. It's been lagging. It's consolidating. All in all, you go to the weekly chart, you can't be too upset because of the size of the move. I haven't updated this in a while here, so I'll do it with you guys. So there's a lot you can see when you go to the weekly chart too. Here's your red dog reversal on the bottom end of this channel. Here's your red dog reversal on the top end. And actually, if you look here now, it looks like it's kind of smack in the middle. So the longer it stays in the middle, it does seem as if you're going to have another move. So this was this year's move. It started all the way. That's why it's been so big. But we peaked in August. So this whole summer's done nothing. So I would say if it stays above this upper end of this bigger channel, chances are it's going to happen sooner than later. If we're going to break that, which it almost did a week or so ago, then it's just who knows how long this channel would have to go in order to digest this move. But all in all, looks pretty good. Actually, even if you take yourself out of what's been going on, it's been consolidating real well. Next time it gets above what was a double top, if it breaks a double top, anyone playing it for it has to cover, and then you get another move here. So all in all, you can see all this. I've been trading this thing for a while, but bottom line is it looks pretty good. It's just I don't know when it's gonna be ready. So if you're getting chopped up trying to figure out when it's gonna get ready, then go out, buy yourself a call spread so it takes some of the pressure off.
Great advice there on how to use options to the
Yes.
great thing about options is your premium is paid, you know your risk, cetera, et cetera. All the things,
Hey.
all the things that I hear from all of you guys all the time. Mhm.
Ah,
All right. Ian or Ian, apologies if I said your name wrong. He asked, how easy is it to become a trader now compared to the times when you started? What would be your recommendations and tips for aspiring traders?
could you ask him a question back? Ask him how old he is. Is he right out of college? Is he in his 30s? Is he trying to trade while having a different job? Is there more information about that?
Um, if you're still on, I believe he probably is because he just asked this question. He can hear you, so hopefully he'll have heard that and answer. Looking at his LinkedIn profile, um, not straight out of college, no, definitely not. So experienced, and we'll see if he answers those questions. While we wait for that, just
I'll
kind of
talk a little bit.
generically, yeah.
Generically, listen, when I was in 1998, 2001, we would have like, I call them pledge classes because I was president of my fraternity in college. So you would have out of college like 20 kids want to be traders because the market
Mhm.
was hot, Wall Street was hot, there wasn't as many computers, and we would like have 4 different sections and go into this whole interview process, do a mind, interview. One would be coordination, one would be, we'd all have different types of questions, and then out of the 40 people that came in for an interview, we'd pick like 18, and then out of the 18, they would all start. They would sit together. They would have to trade 100 shares of one of the moving stocks for a while, and then we had this whole education program for them, and then out of the 18 of them, maybe 5 would make it, through the whole
Mhm.
thing 6 months later, and then be traders, and then 2 years later, maybe 2 people make it. That's it's not that easy to make it.
Mm.
Now, you couldn't find 20 traders to start at the same time. Because trading, it's not like it's a job, but right out of school, people want to get a salary, they want to get benefits, they want to get some kind of comfortable situation. Like my
Yeah.
cousin, or like my nephew just graduated from Clemson. He's a programmer. For now, Avaya, I got $125,000 job. It's a great job, and he'll be there for however long. So so who wants to become a trader, as a prop trader, when you're like, okay, you're going to train for 6 months, not make any money, maybe even lose a little bit of money. And
Mhm.
then, and then the sky's the limit, which it is. But a lot of people don't have the cost structure where they can't make money for 6 months to like 2 years because it costs a lot of money now to live in the city. It's a little different now because a lot of people are remote. But I will say this: you graduate from college and you want to become a lawyer, right? How many years is that? 3 years of law school after college, or is it 4?
3 to 4. I think it's 4 on average. Yeah.
So even if it's 3, law school costs like $200,000, I think, a year. So
Yeah.
you're talking about $500,000 it cost you in 3 years to become a good lawyer, to then work 100 hours and maybe make 250. So right there, $500,000 in debt, 3 years to make 250 to start, etc. So if you're graduating from college, so to think you're going to make 6 figures in the financial industry as a trader right away, why would you? It takes training. It takes lots of different ways to do it. So I say treat it as a graduate program. It might take you 2 years and cost you 50 to 100 grand or just time, and then all of a sudden you can make 6 figures and you could have a few $1 million a year. It all depends. I know traders that have done that before, but
Yeah.
the entry is tougher. Maybe a little less because again, people are doing it remote now. They used to all have to be in New York City, and I don't know what it costs to live in New York City now, but it's like $3,000, to put a wall up and share a 1 bedroom.
Yeah.
Um, but anyway, but it could be done. It could definitely be done. Listen, 2020, when everyone was making huge money, people were trying to leave jobs and they were saying they wanted to become a trader. They did so well, and I was like, don't leave your daytime job unless you really want to be a trader. Same way
Yeah.
after the Nasdaq busted in the Nasdaq bust in the year 2000, went from 5,000 to 1,000. We had 300 traders in Sperling's group. By the time we were at Nasdaq 1,000, we were at 30. But then those 30 who stayed there and learned the craft and learned technical analysis, I went to the West Coast, learned from Willie O'Neill from IBD. I learned from Dan Zanger. I put my process together. So when the bull market started again and trading got easier in 2003, made a lot of money into the financial crisis. And then that volatility was all of our best year because we knew what to expect from the NASDAQ bubble bursting. So
Yeah.
bottom line is, it's not a get rich quick scheme. It takes time. And If you think you're going to come out of college and all of a sudden make six figures or $1 million, you're not. It takes a year. Even like a doctor, my wife's a psychologist. It took her 5 years. She had to go to grad school. She had to be a fellow. She had to do an internship. And P.S. She still has $250,000 worth of whatever it's called, college debt. But she makes a good living, but it takes time. So it takes time here too.
On the second part of his question, he asked, what would be your recommendations or tips for aspiring traders, in the current market in 2023 heading into 2024?
Just start slow, lose less, figure it out. Don't trade over your skis. Don't keep your loss limit at a spot. Paper trade a little bit until you're really consistent. And once you're a little consistent, then up it, because a lot of people think they know what they're doing, and then all of a sudden they lose $50,000, and by the time they know what they're doing, oh, sugar honey iced tea, I got to make back 50,000 and then make a living. So I would say keep your size small and keep your stops in check, and really break it down. $250 a day, 5 days a week, 4 weeks. I think that adds up to, I can't do it in my head, but I think it's almost like a $10,000 a month. Not so bad. Some people don't realize where $1,000 a day is $20,000 for the month. So some people go back and forth up $1,000 and give it back, and all of a sudden they have nothing. So break it down monetarily.
Great. All right. So Philip said, first, thanks for your answer on his options question. And then he asked your long-term outlook on Bitcoin, and if you think the halving event will be a positive catalyst on Bitcoin's price and other cryptos like Ethereum.
I like this question. I think Bitcoin, for the last few years, I've talked about how if you're like an asset allocator, and you have like 60% equities, 20% bonds, you have 10% in gold, there's definitely a place to have 10% in Bitcoin, just Bitcoin. So if you put money in every single month, which some people do for a 401k or a 403b, every month cost average into Bitcoin, I think there's uses and a lot of stuff for it, and over time, net, it's going to be higher. If you trade it actively for a living, like I said before, use the 8 and 21-day moving average. There's a lot of money to be made there trading it for a living too. You look at Bitcoin. You go over here. I'm going to go to Bitcoin right now and then share my screen, which I didn't share yet. Right. So here is share my screen. Let's do that. Boom, boom. Bitcoin cleared the 8-day moving average of 28K right there. Okay, and then it needed to move into the 30s, then was choppy, consolidated, and then took it out again at 37 to hit 45. And this was, it just got extended, came in, held it 21 days. So I usually say, if you're super duper active, use the 8-day. If you're not as active, you can use the 8 and 21-day. Bitcoin has basically been holding the 21-day moving average ever since it broke out down here on October 16th. Now it probably needs time to go sideways to figure it out, to digest with all these profit takers. This doesn't matter as much now. I was writing my report, and I think Michael's like, do you think Bitcoin's going to hit 100,000 next year? I don't know. Do I think it could hit 100,000 in 3 years? Yeah. Right now, if you look at the you look at the weekly chart, here's your all-time high at 69. It just came back. It looks as if there's room to about 48 and then maybe even 55. So if I were to be realistic, I would say, hey, if Bitcoin wants to continue next year, a likely spot, if you're realistic, could be 48 to 55 is your next zone. For this year, I said it can get to 37 to 39 and went above it because I thought that's where it broke down from. So I'm like, hey, maybe Bitcoin ignites and it can get towards 37 to 39 and went above it. Hey, great. So what I try and do is I try and put the levels out there, points of interest, and then figure out when it gets there and how it gets there. So this would be another zone. And then the next zone is 63 to 69. But chances are, everyone keeps printing money and more countries use it as legal tender. It could get to 100 or so. But I also think a lot of people want this to be a little bit more stable, so this way they know, what it's worth versus just being a crazy risk asset on steroids. And here too, got above the 8-day moving average, and it's been above since. I like Ethereum too. I don't think you should hold any altcoins for more than a few months. Like trade them as if you're trading small cap penny stocks, because I know when crypto went, I got really big in Bitcoin. I had a whole story. I transferred over 20 grand. I had to tell my wife, let it go from JP Morgan to Coinbase. She's like, you're out of your mind. I did it anyway and made a lot of money. And then after learning about Bitcoin here, I went into Ethereum, and then into here. All of a sudden now I'm in like 10 different altcoins. My account went from like 20 grand, believe it or not, to like, I think it was up to like 175. And then PS, when it broke around here, I got that, I lost a little bit from my high watermark, and I sold a lot of my altcoins that were up 200%. I kept 25% of a few of them and didn't realize that they could drop 97% off their highs, and not giving enough back. But I did turn as my exercise like 20,000 into 85,000. And it was I just wanted to be involved. I don't like to talk about things that I'm not trading, because then you don't have the psychology of it. So
Yeah.
I was a little late to Bitcoin. I wasn't there, like some of the 14-year-olds when it was at $1,500, but it does trade well technically. So, but just remember that a lot of these altcoins, don't get caught up in the hype, because people are getting a little frothy and start buying all these altcoins that, could wind up being zeros.
Yeah, totally. Earlier you said you wanted to talk about, your Redler Active versus Redler Personal. So I'm guessing that's like, your take as an active trader versus your take as like a personal investor. So let's
Right.
go ahead and do that.
Okay, let's do that. Let's do that. Am I still sharing my screen?
Mm-hmm.
All right, so let's go to the S&P, because in the S&P is where I usually do it. Every week I try and post it. So here's the thing. So, like I said before, if you're a trader, not just a trader, I never want to say someone's just a trader. Typically, you're a K1, so you might not have a 401k. You just might not. You get paid, and it's you kill what you eat, and then you have to have the what's the word? The discipline to put money into an IRA or whatever those vehicles are, and it's a little different. You could put monthly. You could put every year. You could put money aside, tax deferred, and then have it build over time. I have the luxury as a chief strategic officer and a founding partner that I also have a W-2 for that, and I get paid quarterly based on my trading, which is what gets me ahead. So I also have a son who's a freshman in high school, so I've had to think about his college. And then I also have a wife who's in private practice, so she can't have a 401k. She has a 403b, which has monthly flow. So I talked about what I do for my time when I'm 51 now and could be 59, right? That's when you're allowed to take money out of those long-term assets. And for my son, who started, I started putting money away when he was 5 to hopefully having a decent 529 plan for him when he's in college, which I'm a little behind on. So it's fine. So I always post this weekly chart. And then I have the Blood on the Street account, which is my wife worked for UMDNJ, which was a state institution where she had a 401k, she had health benefits, and she had it for like 10 years and decided to go in private practice, which was hard for me because I had to give up my insurance. We won't get into that. She's listening. But now she has a great private practice. Her lifestyle's great, but we have no more 401k, and she doesn't have health insurance. So anyway, so what I had to do is I had to take her account because she couldn't put inflows in anymore. If you could put inflows into a long-term account, you don't have to time anything. It doesn't matter, especially if you're your age, Greta, or you're my age. If you have 8-9 years, just do it every month. And anytime you see the markets in turmoil, maybe you put more in, because chances are you're down 10%, 15% off highs, and you're going to make a new high at some point. So anyway, I always post this weekly chart and show, Redler Personal and Redler, T3. Redler Personal makes his money from trading and then invests it in sectors, or just say mutual funds, whatever it is, and that's over here. So Redler Personal is a 401k every single month getting matched. Redler Personal is my wife's 403b. Redler Personal is my son's 529. Also, whole life insurance policy. I'm 51. When I was 35, my friend went into Strategies for Wealth. He's like, "You need a whole life insurance policy. You have a 2-year-old," and it was $1,500 a month. That's what it was. For $1 million whole life insurance. So I took out term and whole life, and I sacrificed. And PS, I'm 51. Been paying into it for 16 years. It's now paid for. There's a big cash value there. It's been an alternative asset, and now God forbid something happens to me, there's a real asset there. So, I gave up at 35, 1,500, which I would have spent on vacations and dinners and whatever. And all of a sudden, 16 years later, holy cow, how did that happen? Now it's worth a lot of money and it's a great asset. And then I had my wife's street account, who she's not allowed, and she basically, when she left, she put it there and kept it there. And I've kept it in cash, and only times from 10% or more, like in the taper tantrum, I put it to work, or here I put it to work, or here I put it to work 3 times.
Mm-hmm.
And that's like something a lot of traders like to use that account that don't trade that actively, or people that work work as a doctor or a lawyer or a policeman or a fireman. They're like, I don't have time to trade, actively, but I want to put my money to work. When you do your wife's blood in the street account, I just want to buy major dips in 4 tiers, and usually I've done 2 or 3. And I did 2 into this year, sold 1, and now I still have 1, which I'm going to sell up here. And her account's at all-time high. So that's lots of different ways to make money from the market. So that's why I say I don't know your time frame. And then I have this side, which is where I get paid quarterly, where I'm active if we're below the 8 and 21 day, I have all my accounts are in cash, or I try to be. If we're above the 8 and 21 day, like we've been here, I try and have a portfolio approach. I try and just try and make money from the market and have money working when it's working for me, so I can get paid quarterly. And I will say this year was not a great year for me. It's kind of tricky. I talked to a lot of traders. It was a hard trading year, even though the headlines say how much we're up. But so put all that together, it takes time. I didn't start my whole life insurance policy until I was 35. I started trading in 1998. My wife, I'm saying, so it's all different spots in your life, but you got to give up. It's called the marshmallow test. If you go to a kid and say, hey, I'll give you 4 marshmallows today, or I'll give you 10 marshmallows next week, and he says, I want the 4 today, and then you don't get the 10 next week. So sacrifice. Don't take the 4, take the 10. Just wait. So same thing. Put the $1,500 per month if you could afford it, or do whatever you could afford, and over time it'll help you out.
Yeah,
that's the difference.
All right, we're coming up on the end of our event here, and we're also coming up on the end of the year. So I just want to do a little reflecting back for you. You say not your best year of trading, not your best year on your P&L. Might have been a great year of trading, but just not a ton of money made, comparatively, if we're looking back, 2021. So what did 2023 teach you about trading, and how have you adjusted your own strategy?
It's just, all markets are different. You have to keep adjusting. Sectors change, hot stocks change. Some stocks can go up, but they just don't trade conducively to momentum rules. Some things you have to have less size, give more room. Some things you could actually buy higher and sell higher. Some things you can't. It's all a working process. I've always known you don't listen to the TV sets, you don't listen to other people, you listen to the charts in your process. I don't know why this year we felt, this year felt just a little predatory. Like every time things were perfectly set up, something happened that we didn't see, and it cost you a lot of money. Or every time we looked the worst, when everyone said the market's going to, get crushed, they trap all the shorts. Even with like Tesla today. Today, the shorts in Tesla thought, we got this. It's been lagging. It's in range. It broke. Couldn't get above 237. It got below 231. They might have sized it up and turned a good, and then said, hey, I'm taking my hands off this keyboard. If I broke 231, and then all of a sudden it's 238, and they turned making a few $1,000s into losing a lot. So I just felt there was like a lot of situations like that when things didn't happen when you wanted it to happen, but then wound up happening in some way. So when that's the case, sometimes you have to use options. You have to give things some time. So for me, I made money. I'm just off my high water mark. I'm not used to that. So meaning I get paid when I get over a certain amount, making money back, and it's been a little bit of a grind. And can't get upset about it. Can't get emotional about it. You have to have your process and figure out what makes you happy, what makes you tick, what keeps you sane. So you could stack them, rack them, and pack them, like I say, and net money. And all of a sudden, you're making money, you're doing well, you're worked off back to your high watermark, and then you get your checks and you move on. And then what builds character and what builds trading confidence is coming back from a hole. Because then I've been here before and I'll do it again. It just doesn't happen often.
Yeah. Before we talk about your goals for 2024, I did miss an audience question that I want to make sure we answer. Zahn asked, what is a good way to select strike price/expiration date when selling options for weekly or monthly income. He says looking to do with indices or ETFs like XLE, XLF, etc.
I would only sell premium, when things are, very overbought. I talk about the oscillator a lot. When the oscillator is like plus 60, plus 70, I don't mind selling SPYs higher because chances are it's going to be hard to get there, and you can keep premium, and I could use it as a hedge to whatever I'm holding. So, and then sometimes I'll say, you know what, I might take it out, but at some point, it's going to pull back to that, and I could trade around it. I don't mind being short that. You don't short, premium in a flag. Like if you go back to this chart here, you go to the daily, when you're right here and it looks like we're breaking out, you're not selling premium because it could go and then you could get short and then you give up whatever you're long. Maybe you're selling covered calls to owning the SPYs. But up here, or let's use the SPYs for example.
Hold on, we don't see your chart. Got a screen.
You don't see it?
Mm-hmm.
Sharing it?
Yep. Now we see.
All right, so just say like today I actually sold premium in the Qs for the first time in a while. Mm-hmm. Why? Because if you look at the Qs right now, the Qs just had a nice size move, and it's an index. It's not like a stock. A stock can keep going. It's gonna be hard for the Qs to continue to go crazy up here. So basically, 1, 2, 3. You're not selling premium here because if it gets above 394, you have 382 to 394. That's $12. So $12 measured move really from here. 394 is 404. So really, 406 is really the measured move of this channel. So I felt fine saying, hey, we're up all these days. I have some Amazon on, I have some Apple on, a lot of stuff. I'm like, I don't mind selling the 404 calls, for $1.50. So this way, if we're down tomorrow, it's a way to hedge it. I have some room. If we're up tomorrow, maybe I'll short a little bit more and roll it up because we're not quite there. And I don't mind being shorted because I have that time frame where I can work out of it. Here's where the 8 day is. You never short premium right here. Listen, on this day, if you thought that we made a lower high and we're going lower, then all of a sudden you thought we were turning low. It's a different strategy than saying, hey, we're just overbought. I think we're going to rest and I want to create income. So it all depends on what your strategy is. For me, I think we can continue, but it's going to be hard to continue at this pace after 1, 2, 3, 4, 5, 6 days. So I don't mind. What some people do is they'll say, I'm going to go to next Friday and I'm going to sell the 410s because chances are if we get to 410 by next Friday, they're going to suck the premium out. I can make money up until 410 and then can get short at 410. I don't mind getting short at 410 considering how far we've come. So you have to put a lot of consideration there. Like, I didn't mind shorting the end of the day Q's premium because if we're up, I'll sell some longs and then I'll just sell some more higher. And then at some point, I'll get a pullback that I could trade around and then make that money back as long as you can deal with that psychologically.
Mm-hmm. Great. Okay, pull that chart down. And we'll wrap up here with your goals for 2024. So we're just over 2 weeks away from the new year. Talk about your trading goals for the new year.
My trading goals is just to make sure that I continue my process, continue getting up 445, continue to, get in that sauna, do a few hundred reps, go on my ice barrel, keep my mind right, have multiple plans, execute on my plans. Sometimes what irks me is when I write better than I trade myself. So I write a note, I put together 30 charts. Like again, I had coming into this week, I posted the chart of Avago, AMD, and LRCX, and I also posted NVIDIA and ARM. So on Friday, I couldn't go with all 5, so I went with NVIDIA and ARM and AMD, and Avago had huge moves. So I can't be in everything, but sometimes I won't be in the mood to play something that I write about, and then people make good money there, and I could have done it also. So I should be able to do a little bit more and just execute better. So I love when I'm writing and trading at the same time, because then it means everybody's making money and they're watching me make money, so it gives them confidence to do it at the same time. Mm-hmm. Sometimes if I have 25 things that I think are in the game to do something, I go with 5, and 5 different ones work. They all choose the 5 that I choose, and the other 5 work. And I'm like, just because I'm doing something doesn't mean you can't do those. I'm human. I'm not a computer. I don't. I don't want to. I can't maybe have the bandwidth that week to have 15 trades on because maybe I'm going to Fox Business, like I'm going to be on Fox Business 12:20. Maybe I'm going to the city to meet with the CEO. I'm the CSO. So sometimes I put the prep there for everybody else to be able to figure out how to approach it. But typically, I'm the happiest when I'm trading and writing in sync versus writing better than my trading.
All right. Great. All right, Scott, thank you so much for doing this today. This was really great conversation, just all around. We'll see you in the new year for
Yeah.
one of these come January.
Sounds great. You feel
All
good.
right.
Have fun. Have a great holiday season, and I'll see you on the other. See you next year. Remember, guys.
Yeah.
See you.
Good luck. Good luck with the rest of your week and the rest of your year trading. Thanks again.
Thank you. All right. Bye bye.